The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
Good afternoon, traders and traderettes. It is me. Who am I today? In, of course, for the Power Trading Hour. And it's kind of interesting day out here. Beautiful day down in Clearwater again at the headquarters of Technical Trading and Investing, TFNN.com. And we've got a market that's, we could be that. I don't know if I'd use that name for who I'm going to be today. But we'll think about it. I was almost going to say a name of a dictator, but I thought that would make me look bad, not the dictator. But when we look back in history today, in 1990, about 2 a.m. today, local time in 1990, Iraqi forces invaded Kuwait, Iraq's oil-rich neighbor, spanked it like a red-headed stepchild, and took all their stuff. The Kuwaitis, at least the royals, took off and ran over to Saudi Arabia, and the whole country folded like a $5 suitcase, starting a long-term war. Well, I guess you could say a lot of different things. One, you probably don't leave, if you've got an evil dictator, you don't leave him around to go fight him 10 or 15 years later. Take him out right then. If he's evil, he's evil. If he's not, then you probably don't bother going in the first place. So I think there's a lot of lessons to be learned. Of course, Saddam Hussein signed his death warrant when he tried to kill our president, and his son became president. I don't know if the same thing happened today. Let's say that the president of Iran hired people to kill President Obama. Would people still think that we shouldn't go to war? It would be tough, but especially if it was your dad. And I think he signed his death warrant at that time. Anyway, it is kind of interesting. Think back on those days. I remember the day that we went in because I had just flown in and gotten off a plane, and the bombs had just started falling. I literally had gotten off a Delta plane, I think in Cincinnati, and saw the screens up there with the bombs falling, and we had gone to war. But kind of hard to think that, boy, this is almost seems like an eternity ago. Anyway, when we look at the market out here, let's get that up here for a second. We are holding out right at yesterday's highs. We had, till about 11:30, the lightest volume of the year, including half days. There was absolutely no volume earlier in the market, and we're starting to pick up a little bit. Yesterday we had about 2.7 billion shares at this time, 2.6, something like that. 2.1 now. Almost all of that came in a very short amount of time, going about 3 or 4 points down on the S&P and going up about 3 or 4 points. What we don't have is any sign of strength at these higher highs. In fact, we've got a lot of signs of weakness. Should be very, very careful out here with your money. If you are long, God bless you. I would be buying what should be incredibly cheap puts underneath your stocks as insurance. You never know when your house is going to burn down, so you always have insurance. In the stock market, we know when the market is potentially weak. A lot of times, markets can go a lot further than you think. But if I was long today, I would be buying puts galore on any of my long positions. The VIX is down at fairly low levels. And at this point, I think it would be foolish not to be buying protection. But we're at 1705 on the S&P cash. We went to a low of basically 1700, just a couple of ticks above that. And, of course, in the morning, we had a lot more action. Gold got down. I saw it down to 1280, I think 1283 I saw. And that was just right around the time of the release of the jobs numbers, which we will get into here. Jobs numbers came out and posted an average hourly earnings growth of 1.9%, missing the analysts' expectations at 2.2%. Probably the biggest thing is as it always happens, is that they post some fairly decent numbers and then revise them down months later. But what we know about is that the last 2 months were about 26,000 jobs high, plus the miss today. So people were a little bit shocked, and almost everybody had about 188,000 or higher, and came in way under what everybody thought. But people are thinking this is the Goldilocks scenario. There's no way that the Fed can tighten now, so we're going to just continue up. My thought on that would be always the same thing. If this works now, why not just continue it forever? The economy will only grow, and as long as we're willing to double up at the table, and as long as we continue to win, we could have the biggest economy in the world or the biggest bubble in the world. My take is that we are in a bubble, and we are at places right now where this market is showing extreme levels of bubbleiciousness. I'll say that, bubbleiciousness. It's a gum, too. Yeah. So anyway, missed on the job numbers today. Freaking out a little, people, but certainly after a breakout of a high, I normally give it 3 days. And if not, normally you have a huge pullback. Certainly no sign of strength today. Certainly a vapor for volume at these highs. We should be doing something like 5.5 billion shares up here. Yesterday I said about midway through the program we were projected to go out and do 4.3 billion shares. We did 4.2, which was fairly light, again, for breaking all-time highs. Now, can the market continue? I would say, though, there's always a risk in the marketplace. Let's say that you have put $1 million on a football field somewhere. There's always risk. The question is there one landmine placed out there on the field while you wander around trying to find $1 million, or there are 100 landmines out there on the field? Light volume is the sign of more landmines, and it's all well and good till someone loses an eye. So just be careful out there. Buy that downside protection. Another thing that I think a lot of people have not been talking about, but there was a few discussions over it this week, but normally we talk about the market, that we get some bad actors, people at Goldman Sachs. They get to plead guilty, and they're back in business a few weeks later. There is a new part of Dodd-Frank that is going into effect. It was gone to press on July 10th. It goes into effect 60 days after publication, and that's going to be in the first couple of weeks of September. For those that think that the big Wall Street cats can get away with it, the new law is going to be a little different. If you plead guilty, even though there's no jail time, you can be disqualified from being in the financial markets for the rest of your life. It's called Rule 506, Regulation D, and it's actually called the Felons and Other Bad Actors Act. And why people can plead not guilty or go to civil trial and say they're guilty. Even civil infractions that you are found guilty of could bar you from the rest of your life from being in the securities marketplace. So let's say that the big CEOs plead guilty in the near future, let's say after September, for anything that happens after September, let me put it that way. In the future, the SEC can bar you. It is the felons and other bad actors part of Rule 506. It went into effect the 10th and actually has the rule of law 60 days from a publication. So for those people that think that everybody got away with it, this is the first time I've seen any rule or regulation that truly would put some teeth into the SEC. If they can prove you guilty, they can bar you. And I suspect that's what's going to happen in the near future. So kind of interesting. Anyway, we're off less than a point on the S&P cash. A lot of people are going to probably claim this as a victory. I'm going to claim it as a higher high with no volume. We'll probably know on Monday. At 10 o'clock, June factory orders came out. Orders rose 1.5% in June after advancing an upward revision of 3% in May, but they missed expectations for a 2.3% rise this month. That pretty much put the original downside in the market today, but that's pretty much it. So we'll go to other things here. You can always give me a call at 877-927-6648. And we'd be glad to take your phone calls. We've got a couple of minutes now. Don't wait till the end of the show to call in. I think everybody always does that. But if you would like to look at a particular stock, feel free to call us, 877-927-6648. We've got a few stocks that are doing well. LinkedIn came out with some amazing numbers that really no one was talking about. They weren't talking about, analysts weren't talking about, and they did pretty good job of keeping it quiet. Numbers were the best they ever had for growth at LinkedIn. I had thought that maybe I wasn't short or thinking about going short, but I thought that maybe they had reached a level of saturation in the marketplace. Maybe they have now, but certainly they had not before. I think that they had a 23% increase in new applications for LinkedIn. I don't believe in Facebook or LinkedIn. I think they're all cults, but that's just me. I'm, of course, pretty thinking that everybody is after me. It doesn't mean that they aren't, just because you do think that. But I don't know, just a little bit too much information. TMI, too much information. Anyway, LinkedIn up. One of the interesting things is you'd think with a move like this, the volume would be the highest, at least in the last year. And so far, volume is good, but we've got some high volume days back here. The one I was looking at back here when the thing came down, 11.5 million shares. We're doing about half that now. So while we're up, I think maybe it could be a little bit better, even for LinkedIn. Look for a lower open on Monday. We'll be back in a moment.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Had a question in the den, and that was, is there a lockup expiring on LinkedIn? And I don't think so. This thing had about 180 days. And when we look back at it, I think that as soon as it expired, it actually started doing better for the lockup. So not a whole lot there. Of course, you always want to be watching these IPOs for lockups. I actually went short one this week that is got 80% of the shares coming due in September. And I think I'll do well with it. It's a volatile little stock, but boy, do I think there's some huge downside to it when that other 80% comes out. Normally, those short positions on huge lockups work very well when we talk about stocks that have very low floats going into high floats, and they have very low sales. The one that I went after had about $20 million in actual sales. I think it's a good company. I just think it's extremely far in what it's doing. And we do have a phone call, so we'll go right to it. It is Ron in Denver. How you doing today, Ron?
Hi there, David. I was looking to put on a call on FAZ before the afternoon's over.
Okay. I tell you what, I would say that we're at the 1 in 100 times when this kind of light volume at all-time highs. I'd be looking at this all over the place. So what are you thinking here?
Well, isn't isn't it a reverse on the market?
Right. It is reverse a bear 3 times share. And what you want to do is always know what you have in your ETF. And see, direction is this is a financial one, right? And you want to look in the holdings of it to know exactly what you have. Are you watching on Tiger TV?
Yes, I am.
Okay. You can always go to Yahoo and you can look and see what it has. And unfortunately, this one doesn't actually have what's in it. So you'll have to do a little bit more. I have looked into this a little bit farther, but you want to know exactly what's in it. Maybe I'll get a chance to in the break pull it back up. I think you're on the right track, though, when I remember what's been in it before. Let's do this just a little bit. Hang on. Just so I can get what we've got. Maybe this is it. There we go. Okay, so we're looking at FAS. It's come down. It had 3.4 million shares on June 23rd, 2704. Your low of day yesterday was, what was that, 2741. So it still hasn't tested that low. It is certainly into that candle. And, of course, you have 4 million shares yesterday, and you've got, I don't know if that's correct yet, but fairly light volume today. So what's your question out here?
Well, I just thought that the market was probably getting ready to roll over, and I thought they would respond over, just overall. They will, all the ships will sink.
They probably will come down. My question to you is, do you think interest rates are going up or down?
Near term, well, obviously they're going to go up eventually, but near term probably just kind of hold the same.
Okay. That would be the only thing I would have against picking this sector other than any other sector. And that would be that we've got that. I think it will. I think you're on the right side of the trade. There may be a few sectors out there that are weaker than the financials, just because I suspect most people believe that interest rates are going to be going up slightly, not a whole lot, but slightly. And as interest rates go up, these financials will probably do better. So I would, I don't think that this is a bad trade. There may be some better ones out there. So
better sectors, okay.
Yeah, just look at some other ETFs out there. There's a lot of them. Maybe a little broader. Was it IWM? Is that it? I know it's not a triple, but when you get look at these, I dislike that the volume was heavier yesterday. Suggests that maybe you get one more test of that low. But when we look at the iShare Russell's 2000, the IWM, this is what you got that higher volume yesterday. We're getting into it with no volume today. So the answer is yes. Can this fall apart on Monday? The other thing that I really like about pulling the trigger today is that this is the end of fund buying. So on as far as good as it gets, pretty darn close.
Mm-hmm.
Okay?
Okay, thank you.
You bet. We'll be back in just a minute. We're going to go to Robert in Chicago when we get back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're back. We're going to go right to Chicago. And Robert, how you doing today, Robert?
Very good, David. Thanks for taking my call.
Okay. What do you want to? You're looking at Whole Foods. What do you want to eat? What do you want to eat from them?
Hey, they have 99-cent pasta in there.
Do they? I've never been in one. I've never been in one, so I couldn't tell you. But apparently, I know a lot of people in California and L.A. in the Hollywood business, and they all tell me the exact same thing. That is, that they hate their wives going there when they could go to Trader Joe's and pay a whole lot less.
Oh, okay.
In fact, who's the guy that's been in a bunch of stuff? Was in I'm trying to remember his name. Jerry O'Connor. He was in Stand By Me as a kid. He's kind of the fat kid, and he's been in a bunch of other stuff later. He's married to that real hot chick that was a big-time model now. Anyway, that's I bumped into him in the what was it, the airport, and all he could talk about was how she was busy spending huge amounts of money, and he was going down to Trader Joe's to buy all the alcohol for their wedding, and he saved $5,000 over what Whole Foods or somebody else wanted. She of course, she had no idea how that money actually got made or something. It was kind of funny to see a guy that has been in Hollywood for a long time complain about it in the airport. Anyway, let's go ahead with Whole Foods here. What do you want to do with this thing?
What do you think about it?
Well, it's done a double repo pattern, and I'm seeing a ton of these out here. That is if you want to do the 9-day moving average or the 3x3 displaced moving average on these things, it's 10 to 15 days above that moving average. You get 3 or 4 days below it, a couple days above it. The next close below it is when you want to pull the trigger, and your stop is that moving average, so it would be anything above $55. So you got some great risk reward here at what is it trading out at? $54.50, something like that. I don't have the quote up. Yeah, no. I mean, you've got a 50% stop on this thing. If it closes over that $55, you're out of it. And great risk reward. The target would be back down to the previous low. That is $51.19. So technical setup is beautiful. I don't know if there's anything out there on Joe DiNapoli's double repo pattern, but I'm seeing these everywhere, and it has been one of the highest patterns. It happens so infrequently, though, that they're hard to find, but they're everywhere right now in the marketplace. I took one that was in a stock that actually has the IPO lockup, so I think I've got a double whammy going. But a good setup, good technical setup. 50% or 50 cents to the upside, and $4 or $5 to the downside. I like it.
All right,
thanks. We're going to go to Andy Heck. Andy, who normally follows me and stalks me on Tuesdays and Thursdays. I have to watch my back now. Anyway, how you doing today, Andy?
It's your stalker. How are you, buddy?
He follows me on Tuesdays and Thursdays.
And I listened to you the other days. I didn't get a chance to catch the beginning of your show. I had a question. I want to give you some kudos. Yesterday you said that you thought that gold, was going to go down and test that 1275.
Yeah. What did you see the low for today?
Yeah, we got down to 1282.40.
Yeah, I thought it was 1283, but yeah, it's close. I still think we can get that 1275. But go ahead.
Yeah, my question is, what do you make of this action in the market? It's kind of going down, flushing out, and coming right back.
Well,
what is that telling you?
I think we're at some kind of inflection point where technicals will neither matter, and we're going to 2,000 on the S&P. It's going to be the biggest bubble that will bust and destroy the United States for 10, if not 20 years to come. So we've got an opportunity here to burst the bubble before it goes too big. And the Fed coming out midday and telling everybody that there's no way we're ever going to cut just doesn't do it. We're getting way too much money in areas that cannot justify it. Let me put it that way.
That sounds like a very bullish long-term argument for gold to me, fundamentally.
I think that short-term, gold could get back down as low as $1,200, and it's based on a lot of conversations that I've got taped with Jim Sinclair.
Uh-huh.
He basically had been a big, I'm sure you know him.
Yeah, I do. Yeah. I've talked to him over the years, yeah.
But he always, he told me a few things when I had a couple of discussions with him. One was that normally you think that as soon as things get dicey, that gold is going to run right away. And he said normally that's not true, that a lot of people still on Wall Street hedge their long positions in equities with short gold. So if the world comes to an end, gold will take off. But normally that doesn't happen. The markets start pulling back. And as they pull back, gold will start to sell off. As they sell positions, they bring down their gold holdings for the hedges. So the knee-jerk reaction is always gold coming down with the markets. After a couple of weeks, normally that is dissipated. They've taken off those hedges, and we're actually looking at markets that can go up in gold. The other thing you said,
then the physical demand will kick in because the retail market and the people who buy the ETFs and the people who buy the physical and the Indians and the Chinese, all step up on that dip to buy it.
And that's one thing, and I went back through history. I really liked that I could confirm that. The other thing he said is that if you want a bull market in gold, find an equity market that's flat. And
interesting concept.
And so you said when the equity market is not doing a whole lot, or going down. People look for action in other places, especially traders. And he says they love to go run gold when everything's going to hell in a handbasket in the rest of the market. And of course, we saw that in this last move. And I actually have that recording, a couple of recordings of them from interviews around 2000, some of them with Tom O'Brien. So, and I listen to him every once in a while, still have them on CDs.
Yeah, the other thing I would say is that if that does happen and everything does go to hell in a handbasket, the one commodity that's going to be the most volatile will be crude oil, because that'll just fall out of bed.
You know, these I've got a trade on now, but it is I suspect that we're going to see some kind of dissipation of energy. The only thing I can see out there is the presidential change in Iran right now. You know, little people are a little nervous about whether or not that goes fairly clean. This is a total whack job leaving, who thinks that the 13th Imam is coming out of a well, and at that point he needs to nuke the rest of the world. So I'm feeling a little bit better that this guy is leaving. I just don't know who's taking his place. I haven't read a whole lot. I just know that the current guy is a total whack job.
Yeah.
Probably none of them in there would probably pass a sanity test. But you know, maybe some are a little bit.
That's for the job, right?
Yeah, I guess that's part of it. But the only thing I can see, at least in what I read, is that change in Iran, and whether or not that goes smoothly. If he tries a big problem or a coup with the military or anything else. But I guess that's in the next 2 days, so we'll know when we come back on Monday.
Just remember, 2008, oil went up to, what, $147 a barrel? And then when we had all the issues, it dropped in 3 months to under 40. So, you know, if the stock market is kind of, you know, getting up to overbought territory and it's going to correct, I mean, that's the commodity. You know, that's the one on the short side that's going to be, like I say, like I always say on my show, you know, this thing takes the stairs up, goes up nice and slowly, corrects, backs and fills, makes a new high. But when it comes down, man, it takes the elevator. It falls off a cliff. Yeah.
Back on the gold thing, my thoughts on it are more emotional than technical right now. I would just love for gold to go back down to $1,200 one more time and just have everybody scream that it's over. I kind of like the bearishness on the last low, but I think it could get one more notch higher, and that's probably where I'd love to buy it. If I could get gold at $1,200 again, I imagine that everybody would just be wailing and gnashing of teeth and tearing their clothes, and dogs and cats living together. It would be complete anarchy at that level. Gold people would say it's over, and to me, that would be a great place to get back in. And that's what I'm hoping for.
Let me tell you one thing. The open interest in gold is under 400,000 contracts.
Yeah.
All right, so that's the total number of long and short positions that are out there. That's pretty low, you know, considering the last couple of years. So a lot of the speculative froth is not in that market right now. I mean, you know, I know you want to see it negative. Actually, I'd like to see it build on the short side.
Yeah.
But you know, right now I just don't. I see it devoid of anything. So it's kind of just trading in this range. And I just thought it was a very good call, looking for 1275. We got down there, but the bounce was violent.
Yep.
You know, we rejected that, you know, that 1280 level and just popped right back up and traded up to actually 1318, which, you know, on a Friday, an intraday move, that's a pretty big move. It's, you know, what is it? We had $36 low to high. And when I went to sleep last night, gold was down $22.
Yep. I got a question in the den from Mr. Z out here. He says, please ask Andy on the COMEX inventory decline.
Oh, okay. Yeah, I mean, there's so much gold in the world. In the history of the world, 165,000 tons of gold have been produced. And most of that gold, and mined and produced, most of that gold still exists in above-ground stocks. You know, we as human beings, we can buy gold, but it's outliving us, so we're only really renting it. You know, COMEX stocks is just one number. Really, the number is how much gold is held by governments. That's like almost 40,000 tons, almost, you know, 30% of all the gold. And individuals holding gold. There's not a shortage of gold. That's for sure.
His question is, will COMEX cease delivery of bullion?
I think that if they do, it would kill all futures exchanges.
Yeah, I'm not.
Because why would anyone have any faith in a in, whether it's corn, soybeans, oil, in a futures exchange if they were to cut off deliveries of gold? How could they do that?
I don't know. Anyway, I've got another caller here behind you here that I want to get to before the end.
Have a great weekend, and thanks for taking me.
You bet. Call anytime. Call anytime.
Okay, buddy.
Of course, that is Andy, who follows me on Tuesdays and Thursdays, and had his webinar last night, which I think you'll probably get an email about this week and be able to watch. So thanks again, Andy, for the call. He's our go-to guys on commodities. And we're going to go to Bob in Greenlee, Colorado. And
Dave?
We've got him. Yeah. What's up?
Good morning.
Okay. Good afternoon.
Or it's afternoon, 12:46. Yep. I got a stupid question. It's a stock that's called American Graphite Technologies. Mm-hmm. And it's supposed to be probably a substitute for Gorilla Glass on the iPhones.
Yeah.
And it hasn't been patented, and they got a symbol, and it's only 40 cents. But, I mean, tell me something. Do you know anything about this company?
Let's find out about them a little bit.
It's
we know that.
HGIN.
Yeah, we know that they're trading at 40 cents, which probably tells you a little bit right up at the beginning of it. They are an exploration stage company, focuses on the acquisition, exploration, and development of graphite-related mineral properties in the United States. This company was formerly known as Green and Home Quality Life. So, okay, first we know it's 40 cents. Secondly, they changed their name of the company. That's always a bad sign, or normally a bad sign. It means that something really bad happened, or they got a bad name and they decided to change their name. I will give you an example. BlackBerry suddenly becomes RIM, or RIM becomes BlackBerry. Normally when everything becomes so horrible, you have to change your name. Pretty bleak outlook in future. American Graphite Technologies was founded in 2010. It hadn't been around very long, and it's Las Vegas. So they are exploration stage company, okay, and they are looking at graphite-related mineral properties. I don't see anything in here about Gorilla Glass or anything else. Sounds to me... No,
it doesn't say anything about Gorilla Glass. It's going to be made out of plastic. It's going to be thin as paper, and it's going to be ultra-strong. Indestructible, it says.
Yeah, what they're talking about is graphene, not graphite.
Graphene.
Right.
Yeah, graphene.
I have yet to know, and let me put it this way. I've seen 5 scams already about graphite companies and their ability to make graphene. I can give you 4 lead pencils and make 2 football fields full of 1 atom thick graphene. So there isn't a whole graphene. That whole idea is not going to be using tons of graphite. Graphite is hugely available. Most of the technologies that are going to make graphene, which is there are several types of carbon, like diamonds, right? Mm-hmm. Okay, and there's actually 4 different types. Graphene is, I think, the 4th or 5th type. You can actually go to Wikipedia and look this up. But what you find out is that there's almost no money in digging carbon out of the ground because it's everywhere. The money in all of this is going to be in how you create it, whether or not it is carbon, vapor deposition technology, that kind of stuff. People are making actual little balls out of it. I wrote about that in the Tech Insider today. You want to hang on through the break?
Yeah.
Okay. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And, of course, Disco Steve had to come in here all discoed up with his Johnny Terrio shirt, his platform shoes. Horrible, horrible songs. Just horrible. Yeah, it's kind of like, I think it's kind of like digging in a bunch of photographs, and you're reminiscing, and, of course, you get that photograph of your uncle who was a child molester. And you go, it just ruined it all for me. I was going so well, and then the pedophile showed up in the pack. Oh, horrible, horrible beast. Anyway, we're back with Bob in Colorado, and I was just going to say I've seen 5 of these scams already about buying these different companies in graphite.
Right.
And there's more graphite than you could ever shake a stick at. So I'm not going to get real fired up about it.
Yeah, I got one of these flyers sent to. I get them sent to me every day about buying.
Scam. When you get a flyer, I almost guarantee it's a scam.
Oh, it is. I mean, just like a friend of mine used to trade with the brothers, the Foley brothers or the Fools.
Yeah.
I said, you're getting stuff that's 2 weeks late, and they want you to buy in when they're selling out and stuff, you know. But I'm just getting beat up on gold, but I'm watching all the money go into Yamada Gold right now, and I want to know why it went down so much on earnings.
What's the symbol right now?
AUY.
AUY. You know, to tell you...
I did the run-up, and then I got out at about 1083, or... No, I got down out of there around 1088.
AUI?
Yeah, AUI. I got out on the 24th, and I rode the wave up, going from around 885 up to about 1123, and then I took my profits, and then I should have started shorting it around at 1083, and I didn't. I just got out of it and left 5 shares on the board and been watching it going down.
Yeah, certainly ugly yesterday with that volume, but
yeah,
to tell you the truth, I don't look at a lot of gold equities. I got Tom O'Brien for that. And he's my expert, so, I'll look at a chart and stuff. I just don't know enough. I think probably the biggest problem you have in this one is it's a Brazilian one, right? Brazilian South American.
Yamada does a lot of stuff in Argentina, and they got a communist president now, that woman in Argentina, and communists like to take things over, and then they got a communist president in Brazil.
Yeah,
I have a friend of mine that's been in South America a lot, mining business. He said the communists love to take away businesses away from private entities.
They not only do
just
that.
Like Cesar Chavez did it with a year and a half ago. Took the Bolera and cut it in half.
Yeah. Well, there's a reason why all the Nazis and SS went to Argentina. So I think you can probably say that. I've got a friend that I rode with motorcycles for years, and to tell you the truth, he wouldn't ever talk about it. In fact, I bumped into him 6 months ago, and I said, "What about Argentina?" He says, "I'm never going back." So maybe that tells you everything that you ever need to know about Argentina. Anyway, I want to thank you for the call. I got one. Well, don't have time. Someone asked about Trip here before the end of the day, and TRIP. See if I got getting run out of time here. Nice little bounce volume. Boy, you need this thing to probably get back in the $67 area to buy it. We got 2 dojis out here. I think this thing's probably going to come back and fill some of these gaps. Probably like at 65 to 67 bucks, but looks fine. Anyway, we will see you Monday. Same bat channel, same bat time.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.